price just went up $5. Okay, now imagine silver cartel. And you got some Chinese guy who's the director of the silver cartel, comes out with a statement like, well, we're thinking about Mexico and Chile reducing by 10% their silver output. And the silver price goes up $2. This is potentially dynamite.
Finance. Whether you're an experienced investor, an inquisitive student, or just someone who wants to stay ahead in today's ever-changing economic landscape, you've come to the right place. Now, let's get into the details of our news.
In a development that could shake the silver market, analysts are drawing parallels between a potential silver cartel and OPEC's influence on oil prices. Speculation is rising that a silver cartel involving China, Mexico, and Chile could drive significant price movements, reminiscent of oil market dynamics. In a strategic move, a Chinese silver trading powerhouse is expanding its operations in Singapore. The commercial arm of the private smelter, Henan Jinli Gold and Lead Group Co., aims to capitalize on bullish sentiment in metals like copper and aluminum. The division, which handled half of China's silver exports last year, plans to grow its trading team in Singapore from 4 to up to 20 professionals, reflecting the intensifying competition for talent in this sector. The metals market is undergoing a transformation driven by increased demand from renewable energy projects and advancements in artificial intelligence. This shift is attracting major energy traders to metals, traditionally dominated by giants such as Glencore and Trafigura. Jinli's Hong Kong subsidiary played a pivotal role last year, selling 2,000 tons of silver ingots to top bullion banks like JP Chase. Market watchers are intrigued by the potential for a silver cartel. Comments from influential figures could have outsized impacts on prices, as seen in the oil market with OPEC. For example,
This guy who's the director of the silver cartel, and I don't know what they're going to call it, but then he comes out with a statement. I'm talking like 18 months down the road, Chris, comes out with a statement like, well, we're thinking about Mexico and Chile reducing by 10% their silver output. And the silver price goes up $2. If it happened for oil with respect to OPEC, it could happen with silver with respect to a new silver cartel. This is potentially dynamite for pushing up the silver price. Imagine they say, well, okay, and you know, Mexico is all over the news. They're talking about, and the Supreme Court has got to settle on this. It's a restriction on foreign direct investment to the mining industry. And it's not approved, but just having it floated and potential, it's brought about a 60% decline in foreign investment in Mexican mines. Okay. So they're going to see a reduction in the future months for output. Okay, I'm telling you, this silver cartel is going to be a big item, and I'm watching it, and there's not much news with the silver price, and India and China are really angry. India and China are building out solar farms. In the United States, it's largely California. And I've had two, I'll tell you, my consult calls are very valuable. I had an Ohio client and I had a Virginia client, each one reporting rather expansive solar farms in those states, Ohio and Virginia, called PV, photovoltaic, PV. The PV cell is had 2 or 3 rather impressive developments, improvements in the last couple of years, maybe 3 or 4 years. And what's really remarkable, Chris, is it does not bring about less silver. It brings about more efficiency and the motivation to do more silver, to do more panels, more volume, maybe a little bit less silver within, like they're calling it a square meter. How much silver per square meter, how many watts is produced per meter, square meter. It's really quite interesting, but the developments are not bringing
example, if Mexico and Chile announced a 10% reduction in silver output, prices could surge, echoing past reactions in the oil sector. Regulatory uncertainties in Mexico have already caused a 60% decline in foreign investment in its mining industry. This trend suggests future output reductions, adding another layer of complexity to the silver market. Meanwhile, the expansion of solar farms in India and China is bolstering silver demand despite technological advancements in solar efficiency. Innovations in photovoltaic cells have increased efficiency, but also heightened the overall demand for silver. Despite strong fundamentals, silver prices could face downward pressure due to current market sentiment and selling activities. Notably, Shanghai traders are adjusting their positions, impacting the market outlook. Critics argue that Western media is neglecting significant financial stories, such as the US dollar's declining role in global trade and as a reserve currency. The US dollar's usage in global trade is nearing a 50% threshold, a dramatic shift not widely reported in mainstream outlets.
And an extension of Five Eyes is Western Europe. So Western Europe, United Kingdom, United States, Canada, Australia, and New Zealand don't talk much about the unit. They don't talk much about the BRICS. Okay, they've got controlled media. So the West, the primary nations in the West have controlled media. They don't talk much about gold and silver. They don't talk at all about BRICS. They don't talk about the unit. They don't talk about anything that's really important in global finance. They don't talk about the dollar losing its status okay, we're getting close to 50% usage now in global trade for the dollar. We're rapidly declining for Forex reserves that are US Treasury based. These are not stories that are in the Wall Street Journal, the New York Times, the Washington Post, or LA Times. The United States is not well informed. And I'm not really too surprised about the Rick Rule conference, because they're probably very focused on mining stocks, and they're focused on available gold and silver coin dealers, not dealers so much as where does one buy gold and silver coins, and what is the safest way for making payments. I don't find that Americans and especially Europeans, because they've gone back into the dark ages since the sanctions, I don't find that Americans are really astute in seeing what's coming down the road. Because, I'm not making this up, most Americans don't know much of anything about the dollar. They don't know that it's being used in global trade. They don't know that treasury bonds are held in foreign central banks. I've asked some people who visit me and people I meet at like sports bars, I ask them dollar questions. They don't know anything about anything. I mean, they are dangerously ignorant about the dollar and global matters of finance. I could recite a lot of different questions, and I had my favorite. And actually, since that illicit lockdown in 2020, I haven't gone to the sports bars much. What I've been doing, this is just a personal note, but it's really college football. I go on a Saturday, and I meet a couple friends, maybe if I'm lucky, and I get assaulted by attractive young women, and I watch a couple of games.
There's a concerning lack of awareness among Americans regarding global financial matters, particularly the status of the US dollar. This ignorance extends to the intricate details of international trade and currency reserves. In the midst of these developments, the video calls on viewers to consider their own investment strategies. Will the manipulation of gold and silver prices end, leading to soaring values? The speaker shares insights on potential selling points for silver, emphasizing the importance of seizing profit opportunities. As the market evolves, the video encourages viewers to stay informed, share their predictions, and engage in discussions about the future of silver and broader economic trends.
Injected. Okay, is there anything strong about the European economy? No. Okay, so any effort to reduce the dollar valuation is going to result in more inflation and direct impact to a higher gold price. It's just so basic, and it's a bit funny. Trump has said, I want to do a series of rate cuts. And today, Hatzius, did you see this on from Goldman Sachs? Okay, this is just wonderful. They're going to use false economic statistics to justify a 1.5% interest rate decline. It could be 6 cuts, but it could be 5, with the first being 30 basis points. 50 basis points. Okay, so we got false economic statistics, false labor statistics, false inflation statistics, and if they doctor it all and present it with a good enough package, by gum, we can get some rate cuts. And we can lie then about the resulting inflation that comes and say that it'll be good inflation beside.